Hi everyone, I'm Caroline Zakari and I work for the Office of Civics and Community Services here at the Los Angeles Public Library. Welcome to Financial Planning Month. Today's program is called Investor Protection and is part of month-end programs in support of financial planning. This program is brought to you by the Securities and Exchange Commission, SEC, and the Los Angeles Public Library. Carol Lally from the SEC will talk about what the SEC does and how it can help you invest wisely, common scams, and tips to avoid fraud. We will have a brief Q&A after the presentation, so please send us your questions throughout the program. Thank you and take it away, Carol.
Good afternoon. Thank you so much for inviting me. I've given a version of this presentation several times before, and it's always a pleasure to be invited back by the library and to speak with the public about protecting yourself from investment scams and basically just investing wisely for your future. Let me start off with how I have to start all of my presentations is basically just a disclaimer that we're required to give, and that is everything I say here today is not an official statement of SEC policy. I cannot give legal advice or business advice, but hopefully nonetheless, I'm going to provide some information that you will find helpful. As you may or may not know, unfortunately, financial fraud is very prevalent. More than 8 in 10 of us are going to be solicited at some point in our lives for a fraudulent offer. A not insignificant portion of us, more than 10%, will actually participate in a fraudulent offer. And of the people who participate in fraudulent offers, again, a not insubstantial portion will actually lose significant funds. As you can see from the slide, the year for which we have the most recent data, over $50 billion a year was lost to fraud. So unfortunately, fraud is quite common, not just in the securities industry, but really in all aspects of our life, unfortunately. The bad guys are out there making life hard for all of us. So that's why we're here today. And we're going to talk about, as Caroline mentioned, the red flags of fraud, some common scams, and steps that you can take to avoid fraud. And at the end, I'll identify some resources from the SEC that you might find helpful. Pretty much everything that we talk about today is available to you at no cost on the SEC's website, investor.gov. And hopefully, if we have time, I will take you to the website, walk through it, give you a sense of how to use it. But it's full of a lot of really useful information, and it's designed to be user-friendly. So let me back up just a minute before we get too far into the presentation and tell you a little bit about myself and the SEC. I will leave time for questions at the end. If you have questions as we go along, if you want to put them in the chat, that's fine, and I'll come back to them. I found that it works better for me and for audiences if I hold the questions to the end. It's quite possible we'll cover what your question is during the presentation, but if we don't, I'm happy to take it at the end of the presentation. I'm an attorney. I've worked at the United States Securities and Exchange Commission for roughly 20 years. My group handles the intake of tips and complaints to the SEC. So when people call us or email us with questions or concerns that they may have been the victim of a scam, my group is one of the groups that looks at those and responds to investors and decides what the SEC is going to investigate and what we're going to examine. For those of you who don't know, the United States Securities and Exchange Commission is the exclusive federal civil regulator of the securities markets. So that's stocks, bonds, but also other kinds of investments that people don't always realize are securities. Anytime people pool their money together in a common enterprise, with the expectation that that enterprise, if it's successful, will generate profits and that those profits will be returned to them. But those individuals are passive. They are not actively running the business. They're not making the widgets. They're not the CEO. they're sitting back hoping that business generates profits for them, that's a security, and it's regulated by the SEC. And as we'll talk about, almost all securities and securities offerings have to be registered with the SEC. So one of the red flags of fraud that we very frequently see is that those securities are not registered with us. And sometimes these securities can take a form that people don't necessarily realize constitutes a security, or that it would be something that the federal government would be involved in registering. So you might get an offer to invest in something that looks pretty informal. Maybe it's just a 2 or 3 page written contract, and it's called an investment agreement or a private placement memorandum. There's a pretty decent chance that that actually is a security that is regulated by the SEC. And we'll talk about that in a little more depth. People are maybe most common and most familiar with the part of the SEC that investigates and prosecutes securities fraud, like insider trading or accounting fraud at big public companies or Ponzi schemes. And that is a good part of what the SEC does, although it's not the only thing that the SEC does. Lots of times people ask me, why hasn't the SEC put so-and-so bad guy in jail? And the answer is we are a civil agency. We're not a criminal agency, although we do have pretty expansive tools at our disposal, including the ability to take control of an entity that's being controlled by bad guys, get funds back to harmed investors, get money repatriated from overseas. But we can't send people to prison. We can bar them from working in the industry, and we do work pretty frequently with the criminal authorities. So almost every case that I have worked on as an SEC enforcement attorney, probably 75%, involved federal criminal authorities or state criminal authorities. So I've worked with the FBI, IRS, Homeland, U.S. Attorney's Office, District Attorney's Offices. So that's not at all uncommon in our cases, but the SEC is not the one sending people to prison. That's the criminal authorities. So that's kind of the background of me and the SEC and generally the information that we're going to talk about today. So let's dive right into what the red flags of fraud are and why you should be looking for these red flags. Whether or not you know it, there's a good chance that you are involved in the securities market. Even if you don't invest directly, you may have a retirement account through your employer, like a 401k. Or you may have a pension or something like a pension where that pension fund is invested in securities. But then, of course, people also participate directly in the securities market, either by trading on, through a broker or trading through a platform. So when you're involved in that, or if you get involved in it, it's more of an alternative investment of the kind that I talked about, these are the red flags of fraud that you want to be looking for. I do have a clip in this slide, but it's pretty difficult to show the movie clips online. So let me just say, if you've ever seen the movie The Wolf of Wall Street and you've seen the scene that's referenced by the slide where Leonardo DiCaprio, playing a real person, Jordan Belfort, who was actually prosecuted by the SEC, giving a sales pitch, you get a sense of how it's portrayed in the movie, which frankly, I think this scene in the movie is not that dissimilar from what happens in real life. Fraudsters very often tend to be quite charming people. That's my experience dealing with them in testimony. Very persuasive salespeople, but usually they are using those charms to their own benefit to try to get people to participate in something that may not be in the individual's best interest, but is in their best interest. They're going to make money off of it. And very often they will use their connections to create a bond of trust. So if they are a member of a faith-based community, or let's say they have military service or a particular career, they might seek out people from that same faith community, affinity community, neighborhood, profession, military service, because already that creates a sort of bond of trust that makes it easier to target potential victims. The red flags of fraud really come down to things that if we step back and think about it, we probably all know about and have heard. And it's hard to internalize these in the heat of the moment if you're being pressured by an effective salesperson, or if you're feeling uncomfortable about where your financial situation is. But if it sounds too good to be true, it probably is too good to be true. Risk and reward are correlated in the securities industry and in securities investing. So first and foremost, it's important to know that all securities involve risk, including the risk of complete loss of whatever funds you may have invested. And returns correlate with the potential for returns. And the key word is potential. If anyone ever uses the word guaranteed, that's a big red flag. If anyone says to you, this has the potential for extremely high returns, but the risk is very low, again, that's a red flag because risk and reward are correlated. Things that are less risky have the potential for traditionally lower returns. So we're talking about investments more like CDs or something like a savings account, which are not securities. Once things become riskier, the potential for return is higher, but the key word is potential because returns are not guaranteed. So you should see a correlation in the marketing pitch between the potential returns and the level of risk. And if anyone tries to tell you, here's a investment that will beat the market but has very low risk, then that's a huge red flag. Pressure to buy right now, also a big red flag. These are going to be some of the more important financial decisions you're going to make in your life, especially if you're planning for something long term like your retirement. So any legitimate salesperson will know that you will need the opportunity to really think about that decision, to read all of the literature, and to make that decision very carefully. And they're going to give you the time to do that. Lack of documentation. There should be some paperwork, and in particular, there probably should be some publicly available filings with the SEC, including financial statements and detailed prospectuses describing the nature of the investment, what you're going to be investing in, where the returns are coming from, who's going to get compensated, and how. All of that should be described pretty thoroughly in some sort of written documentation. So if that doesn't exist, that's a big red flag. And then the person and the company that they work for who is selling the investment to you should be licensed or registered. So if they're not licensed or registered, that's a red flag. Just as the investment itself, the thing that you're investing in, should likely be registered with SEC. So should the salesperson, either with FINRA or with the SEC. And I will show you how to check for those things towards the end of the presentation. Unsolicited offers can also be a big red flag. The best situation is when you do your research and you reach out to the investment or the salesperson, the broker dealer, the financial professional that you would like to work with instead of the other way around. So I'd be very cautious about responding to unsolicited communications like emails or cold calls or social media overtures. The best way to handle those is to ignore them. If for some reason you decide you want to engage the person that has contacted you in an unsolicited way, always do your own research before you make a decision. Don't just rely on the information that that person is providing you. Fraudsters use a lot of kind of common approaches to try to be persuasive. They're going to dangle the prospect of some wealth, possibly with very little risk, as a way to entice you. They might claim to be from some sort of reputable firm or have special credentials. And as we'll talk about, there's a way to check that, to figure out whether or not these are credentials that really matter and whether or not they're registered. Scarcity is a very common sales tactic, even when salespeople aren't being fraudsters. They tend to try to use this sort of tactic that there's only a limited amount of time, supplies are low, you've got to act quickly. And this false sense of urgency sometimes gets people to act more quickly in ways that might not really be in their best interest. Sometimes salespeople will offer to do you a small favor in return for what is really a much larger favor on your part of investing money. So for example, we very often see the free lunch seminar as a kind of questionable sales tactic, where a financial professional will give a presentation at some group's lunch meeting and provide a free lunch of some sort in exchange for this free investing advice. At the end of that free lunch, more than likely, they're going to try to get some of the audience participants to sign up as a client and invest some money with them. And you may feel some level of kind of social responsibility to give a little bit of money to this person who's just provided you with this very nice free lunch and free investing advice. But what you're giving them, your investing dollars, is worth so much more than any lunch or the advice that you might have gotten in the course of this free lunch. You really want to be careful about feeling the social guilt of investing your hard-earned money this way. And then if other people that you trust have invested or that you think might be savvy have invested, that can also create a lot of pressure to sort of follow their lead. But just be aware that sometimes even well-intentioned or smart people can themselves have made poor decisions or have been duped by a fraudster, or at the very least, their investing interests may not be the same as yours. So just be really careful of all of these tactics. And no matter what the situation is, you want to make sure you do your research. Let's talk about some of the more common scams that we see at the SEC. And I said my group handles the tips and complaints that come into our office. The Los Angeles Regional Office of the SEC covers all of Southern California, Arizona, Nevada, Hawaii, and the Pacific Islands. So a very large region geographically and also one of the most populous parts of the United States. And we see literally dozens of tips and complaints every week. And some of them, a great percentage of them, frankly, involve some of these common scams that we're going to talk about here today. One very common scam is pump and dump. And if you saw the Wolf of Wall Street movie, that movie involves a pump and dump scheme, or actually several pump and dump schemes, where bad guys have gotten control of small companies, what are sometimes called penny stock or microcap stocks, because their stocks are usually trading at or about $1. And then bad guys pump up the stock, usually on social media networks, YouTube, other kinds of places like that, maybe some sort of email campaign or phone call campaign where they cold call people and talk about, here's this small company that's really set to take off and you can get in on the ground level. And lots of times the information that they're providing is questionable at best and false at worst. And the public will buy the stock thinking it's just a few dollars for each share. Why not just give it a risk? And what they don't know is while these public comments and the buying by the public is causing the price of the stock to go up, the insiders who probably got their shares for nothing are selling. And so they're making a huge profit, even if the stock has only gone up by a few dollars. That's a pump and dump. And there's very limited market for these smaller shares. Not a lot of buyers out there. It's not like Exxon traded on the New York Stock Exchange. And so then once the individuals realize that maybe this isn't a good investment, they're very often left holding the bag because there's no one to sell their shares to. This is a very, very common scheme. If you choose to participate in the over-the-counter market where these penny stocks are traded, I would just caution you to do your research very thoroughly, because even the legitimate companies on this market are small companies with not a lot of track record. There may be reasons why they are not able to raise money through larger capital raising efforts or through conventional financing that might, even if they're legitimate companies, make them much riskier, which is why they're trading over the counter. So just be very careful in this area. Ponzi schemes, you're probably familiar with this concept. These are extremely common. These are the kinds of investment schemes where you will see that private placement memorandum or a prospectus or an investment agreement that maybe could be several dozen pages of a written document, but it probably won't be registered with the SEC. And they'll have all kinds of reasons why they haven't registered it with the SEC. But underneath it, there's really no there there. They'll be claiming to take investor money in to invest in a business that could be doing any kind of thing, developing real estate, engaged in crypto mining. Lots of times we see scams related to what are emerging industries, like the marijuana industry. We see a lot of scams in that area too. But it could be any kind of business. Whatever widgets they're building, they're claiming they're going to take investors' money, build a profitable business, and then return the profits to you. And very often this is where you see the promise of high returns in exchange for little risk. Lots of times there's a very complex strategy, maybe some multi-level marketing component. The sellers and the investment frequently are not registered, as I said. And unfortunately, The bad guys are using new investor money to pay what appear to be returns to pre-existing investors. So it's really just money going in a circle. Lots of times they're also buying themselves a big house, going on nice vacations. And unfortunately, the Ponzi scheme, although it's widely publicized in the press and people are aware of it, continues to be extremely popular. So be quite cautious investing in something where there isn't a lot of information available, where people are not registered and the securities are not registered. And if it seems to be something that's sort of hard to understand or maybe limited to just one community of investors, you really want to do your research here. Pyramid schemes is very similar to a Ponzi scheme, but this will have more of a multi-level marketing component where the emphasis is really on recruiting new people to join rather than the genuine product or service that they purport to be providing. Lots of times there's a very complex commission or compensation structure, and if you were to look behind the curtain, what you would find is the entity really makes all of its money from recruiting new salespeople in the multi-level marketing pyramid, not from retail sales of any product or service. So again, be very cautious investing in these sorts of entities. Lots of times I will get tips where people have received what appears to be a legitimate investment newsletter, usually via email, some sort of email campaign. And lots of times these supposedly legitimate, unbiased newsletters are actually promotional pieces being paid for by the stock companies that they are promoting. So very often you see this in a pump and dump scheme where there'll be basically a spam campaign of some sort of purported newsletter touting the success of the company. I did a pump and dump investigation several years ago where this is exactly what happened. The company paid a newsletter to send out puff piece promotional emails about the company. So be very, very careful. Look at the bottom of that email, or if it's printed, the bottom of the newsletter, and see if it says whether or not the newsletter is compensated for giving its opinion, either in stock or in cold hard cash or something along those lines. If that disclosure is there, then you know that this is not unbiased opinions that you're getting. But sometimes the bad guys don't put the disclosure there. They are required by law, but they may not. So even if that disclosure isn't there, you still want to act with caution, do your own research. In fact, the case that I worked on, that was exactly the issue. The newsletter was getting compensated for its opinion, but it didn't tell the readers that. Advanced fee fraud, this is not technically a security scheme, but it is something that we see a lot of, where people are asked to make a payment up front before they can receive the proceeds, which might be described as some sort of lottery winning or something along those lines. This is an extremely common scam, and you should proceed with extreme caution because no legitimate lottery or investment is going to ask for some sort of transactional payment up front, which is usually described as like a processing fee or mailing expenses or taxes. They're not going to ask for that up front and for you to be repaid later. That is a scheme, and you should report it. You should actually report this to the Federal Trade Commission, the FTC, which oversees this part of the law. Be very cautious about people claiming to be from the government. Sometimes we see scammers claiming to be the SEC or to be somehow endorsed by the SEC. The SEC does not endorse investments. We don't participate in money transfers. We don't assist in the purchase or sale of securities. We are not directly involved in providing investment advice or investment services in that way. So if you get an unsolicited communication from someone claiming to be the government, whether it's the SEC or someone else, hang up the phone, go and find the publicly available contact information for that government office, its email, its phone number, and call and ask them, did you contact me? The IRS is not going to call you. The IRS will send you a letter if they want to communicate with you. More than likely, government agency is not going to contact you in that way. So if you have any questions at all, don't engage, hang up the phone, don't respond to the email. Do your independent research to find the correct contact information for that government agency and then contact the government agency. Binary option fraud, this is also something that has been common historically. I think we're not seeing as much of this now, but this is kind of like a binary option is kind of like an either or sort of bet. And it is very often used by fraudulent actors. There will be high pressure sales tactics. There will be unauthorized credit card charges. If you have been approached to invest in something called a binary option, I would strongly encourage you to go to investor.gov and type in the phrase binary option, and you'll see a number of helpful information pages about binary options and what they are. Affinity fraud, I mentioned that fraudsters very often target members of their own community. So whatever kind of community or group you see yourself as part of, be cautious because people who are part of that group, somewhere in there, there may be a bad actor, somebody who is either legitimately part of the group or pretending to be part of the group, or there may be genuine people who have your best interests at heart, but may themselves not realize that they have been a victim of a scam. So fraudsters often are part of a group that they then target. So I mentioned some of the cases that I've worked on. One of them that I worked on most recently involved an individual out of San Diego who was both a member of a faith community and his father had served in the military. So most of the people he persuaded to invest in his scheme, which was a scheme which was prosecuted both criminally and civilly, were part of his faith community and had been in the military or were currently in the military. So that's really who he targeted, and you need to be careful even with if you're dealing with people whom you think you know. People who are targeted in these affinity frauds are really everybody and anybody. So whatever sort of community you are part of, there is somebody working within that community to try to target it for fraud. So just be cautious. And it's, I think, very shocking and hard for people to believe that people who are part of their faith would try to cheat them. But unfortunately, this is a pretty common affinity fraud that we see. People who are part of the same congregation or larger faith being targeted in frauds. So again, as I said, these communities unfortunately have frequently been the victim of fraud. So always do the research that we're going to talk about, even if you think you can trust this person. So here's an example on the slide on the screen of the kind of case that we have brought in the past. We charged a corporation and its founder for making false and misleading statements about securities often aimed at Christian investors. So he employed a number of different religious references to make his investment pitch seem more plausible. Similarly, we charged an individual in his business who defrauded over 100 investors that he solicited to be financial partners, telling investors that their funds were going to be used to promote and host Christian music festivals and concerts. He used some of the language that we've seen on our red flag slides, such as secured and guaranteed. And these should have been red flags right there, but unfortunately, he was preying on people's religious beliefs to kind of lower those walls of caution that people might have otherwise put up, and was able to get through their defenses by preying on their best interests and their sense of community. I mentioned the person in San Diego. He very much used the language of his faith, talked about wanting to do something alternative to what he'd seen in the more widestream media and press and investing community, and really preyed on people's desire to do good with their investment and their lives to find his victims. So be very cautious even within your own community. The slide, I don't make the slides, DC has the slide. If we were in person, I could play the video, but they're actually quite hard to play via some sort of Zoom-like platform. So I apologize for that, but I think you probably get the sense of the kind of fraud that I'm talking about. But please, if you've got any questions, please enter them in the chat. So now that we've talked about the sorts of fraudulent schemes that you might be approached to participate in, what can you do to avoid fraud? The very first thing you should do if you're considering any kind of investment is go to investor.gov, because there is, as I said, a lot of really useful information there, and we'll jump to the website in just a moment so you can see how to navigate it. The very first thing you're going to do is you're going to check out the person or the company who is offering you the investment advice. So that's the person selling you the investment and the company that they work for, whether they're claiming to be a broker or investment advisor or some other sort of investment professional, and you want to get some information about their background. And you can do that right on the landing page and put in the person's name and get to see some history about them. If they are registered, if they're not registered, they won't be in the database, which is itself a pretty big red flag. So I do have slides on this, but I think it's actually more helpful to go to the website itself. So let me see if I can get that on the screen. You should all be able to see investor.gov. And this landing page right here, the very first thing you see is check out your investment professional. So I would put in right here in this screen the name of either, you can see the individual or the firm. So you want to search both the individual and the company that they claim to be employed by. So let's say that I was approached by someone named Jordan Belfort today. And as you may remember from earlier in the presentation, this is the actual broker who was behind the Wolf of Wall Street scam. So I put his name, but I don't know that. I've been approached by a guy named Jordan Belfort to invest in what he says is a really great investment. So I'm going to put his name in and see if he's registered. And the very first thing I see is that he was barred by FINRA or the SEC, which I think would be information that you would want to know before you did business with Mr. Belfort. Now I'm going to click on get the full report so we can see what sort of information is out there about Mr. Belfort. This screen comes up, but I always click right over here on the right-hand side to detailed report because that'll get you more information. And this report, this detailed report is written, intended to be anyway, written in a way that's pretty accessible and doesn't use a lot of lingo. It's here for the public to see. The first page of the report is going to describe what the information is that's in the report and how it's gathered. And then we get into some background information about Mr. Belfort. We can see where he was registered as a broker. We can see what securities examinations he took and when he took them. And you can Google these terms pretty easily. Series 24, Series 7, Series 63. These are the basic examinations you have to take and pass to be a broker. And again, you can see more detail on where he was registered as a broker. But now we get to the juicy part, the disclosure of regulatory events. So these are going to be, as the page says, information that comes from the brokerage house that the individual may have worked for, the government, if people have had customer complaints, if they've been sued, if they've been sued by the government or by FINRA, the self-regulating organization that oversees brokers, and then the SEC oversees FINRA, as well as the individual brokers and the brokerage companies. They're going to provide information that would be in this disclosure section. A lot of individuals will have absolutely no information in this disclosure section at all because nothing will have happened bad that needs to be reported to FINRA. If it's an entity, it may, especially if it's larger, have some disclosure events in here. No large company is going to go through life without being sued at some point. So you don't necessarily have to be dissuaded if there's information here, but it's definitely something that should pique your interest, and you will want to take a closer look at anything that is in here and decide whether or not it impacts your decision to do business with this person. So scrolling down, we see in Mr. Belfort's case, he's got 3 disclosure events. He's been sued by the state of Michigan. He's been sued by the state of Maryland. And here's the big one. He's been sued by the United States Securities and Exchange Commission. And if you look, you can see what he has been sued for. He was barred from the industry, and he was sued for participating in a scheme and required to pay, here you can see disgorgement, which means disgorging money that he got through fraudulent pretenses, paying that back to the SEC, which then, as I say, tries to get the money back to harmed investors. Disgorgement of $1.5 million plus prejudgment interest of over $500,000, a civil penalty of $500,000, and then permanently barred from working in the industry. So I personally would definitely want to know this before I did business with Mr. Belfort. And that's why it's important to search for the person in this search tool. Now, if I were to go to this search tool and the individual or the company was not in it at all, there were no results, then that is itself a red flag, because anybody who buys or sells securities on someone else's behalf for compensation is required to be registered or licensed. If they're buying and selling in exchange for a commission, that's typically a broker, and they're going to be licensed through FINRA, which is then, as I said, is overseen by the SEC, and they will be in FINRA's database. If they are providing investment advice in exchange for a percentage of the funds under management, very often that's somebody who is running a fund of some kind, then that individual should be registered with the SEC or with the state as an investment advisor. Either way, you put their name and the company's name in this database and they should come up. And if they don't, that's a huge red flag. Since we're here, let's take a moment to look a little bit more at the website and see what else is here. So lots of different information. You can find information if you're interested in the crypto market. There's information about the crypto market here. Resources for particular segments of the population. So you see here resources, for older investors. There are also resources particularly targeted to the military and other communities. Financial tools and calculators, including some of the most popular things that are on this website, like the compound interest calculator, the Social Security requirement estimator, and a lot of really useful, helpful tools. You can also sign up to receive investor alerts and bulletins, which get issued by the SEC periodically to alert people about developments in the securities industry generally, but then also things that they might want to be careful about. If you believe that you have been the victim of some sort of investment scheme, here is the best place to submit your tip or complaint. Right here in this portal, which we call our TCR portal. Put that information in. There's a pretty simple fill in the box form, and that goes to DC, and then immediately our Office of Market Intelligence begins looking at it and reviewing it. So this is the best way to get in touch with the SEC, in my opinion. But a lot of really useful information. I would poke around in here, information about the red flags of fraud, more detailed than what we're going to cover in this presentation, and just a lot of really useful information. If you're new to investing, here's a good place to start right there. And then additional resources, I mentioned that there were, and it comes up actually looking sort of different depending on what your browser looks like. There are quizzes that you can sign up for, more information about microcap fraud that we talked about, a retirement toolkit. So really a lot of really useful information, and I strongly encourage you to use this website. Well, let me go back to my PowerPoint presentation, and we'll talk about the next steps in our research. So you've been approached by an individual to invest some amount of money in an investment. The first thing you're doing is you're checking out that individual and his employer to make sure they're licensed or registered and they don't have any red flags in their background. Maybe you, instead of working with a professional, you want to use an investing app to invest through some sort of platform. The most common one that people ask me about is Robinhood. So this is not to say you shouldn't use those apps or they don't have a role in investing, but you do want to be careful that you are doing the same kind of research on the investing app that you might do with any sort of investing tool or professional. So the investing app should also be a registered investment firm, just like we looked for an individual, and check on investor.gov, like I just showed you how to do, to make sure that app is registered with us. If they are not, that's a big red flag. One of the reasons people are attracted to these investing apps is that the fees seem low or possibly non-existent, but I would find out how the costs and commission work, because trust me, those investing apps are making money somehow, and it may not be in a way that aligns with your best interest. So if you haven't, if you're interested in this area and you want to do some research, you might start just by going onto investor.gov and looking up information about investing app. You might want to Google the term payment for order flow. There's a movie out right now called Dumb Money about the GameStop investing craze from, I think, roughly a year, maybe 2 years ago. If you go see that movie, they'll talk about payment for order flow in there. So that's kind of a little helpful real world scenario that might be of interest to you. It can be very difficult to actually get a human being on the line if you use one of these investing apps. And sometimes you might find yourself at a crossroad in an investing decision where you'd really like to talk to a person. And if that's something that's likely to be of interest to you, then you might want to think carefully about using an investing app. Sometimes these apps give people access to really complex, high risk products or strategies that might not really be in their best interest, and they might not have the experience to really be prepared for all the risks that come with those strategies. You may be familiar with several years ago, there was a young man, really just, I think, like a 18-year-old or maybe a young college student, very young person who got involved investing on one of these investing apps and didn't really understand the incredibly high risk products that he was investing in. He woke up one morning, he saw that his balance had gone to negative 700, something along these lines, $700,000, which of course is a lot of money for any of us, but especially for a young person, and was just overwhelmed and did not realize he had invested in a complex strategy where the losses are theoretically endless. So some of these complex strategies, it's not like buying a stock, you paid $10. If the company goes to zero, you've lost $10. Some of these more risky strategies like margins and shorting and futures can involve risks that are greater than that. And so he tried to get someone on the line. He could not get in touch with an actual human being at the company. He panicked. And if you're familiar with this story, you know that it has a very sad end, that that individual actually committed suicide. In fact, he did not owe $700,000. He didn't really understand, as I said, what he'd invested in or the information that he was getting from the app. I tell you this story not to tell you don't invest through apps. You got to make your own investing decision about what is wise for you. I tell you this story merely to illustrate the kinds of risks that might be involved in making decisions in terms of making sure you've got the investing platform that's right for you. Are you going to be able to access the sort of information and communication that you need to make your investing decisions? And make sure you feel comfortable with that before you make your decisions. Lots of times when people talk to me about investing, they really think investing involves timing the market and picking a winner, getting in and getting out, and making your profits quickly. But research tends to show that this sort of timing the market, quick investing strategy is unsuccessful for the vast amount of individuals and, in fact, investing professionals as well. Successful investing really involves long-term planning, slow and steady, winning the race. Not very exciting or sexy, but that is usually the success formula for most people and most professionals in the investing industry. All right, so you've done the research on your investing professional or your app. Now you want to do the research on the thing itself that you're investing in, the actual security or fund of securities that you are investing in. And what you want to find out is that investment registered with the SEC? Because there are very few circumstances in which a securities investment should not be registered with the SEC. So let's go to the EDGAR database, which has the information about registered companies, and see how to use it. That database you can find right here on sec.gov, the SEC's other website. This one is kind of more official looking. It has a lot of information about the agency. So if you're interested in learning about the agency, including careers at the SEC, this is where you would get that information. If you want to see litigation releases or just our general news releases and press releases, that information is all here. But we're interested in going to the EDGAR database, which you get from the drop-down menu for filings. And you can search it either from this first one, EDGAR Search and Ask, or you can search it from the company filing search, which is where I'm going to go because it's a little more intuitive how to use, I think, or just a little simpler interface. There's also a drop down on how to search EDGAR. So if you want more information out of this after this presentation, I would go here. But basically you come again to a search tool and you can just put in the name of the company. And if you're thinking to yourself, like, I don't really know this information that's going to pop up, I'm not sure I'd understand it. Well, right underneath the search tool, there is a how to research public companies link. And it has a lot of useful information, including information that explains a lot of the different forms that you'll see on the SEC EDGAR database. So you may be familiar with the expressions 10K, 10Q, 8K, but maybe you don't know exactly what's in there or how to read them. So we have guides on how to read the 10K, which is the form that's filed when a company's filing its annual report. And it's going to include financial information, and the 10Q, which is the quarterly report. But let's just put in a company name and see what this is going to look like. So I'm going to put in a company that we're all familiar with, just so you can get a sense of what's in the database. First, there's just basic information about the company. Where is it located? What's the industry that it's in? How long has it been incorporated? When its fiscal year ends? But then if you scroll down, you'll see their filings. And you can choose to view just some of the filings if you just want to see the 10Ks and 10Qs, or you can view all of the filings. And then there'll be a link to everything that they filed most recently. So going back to the 10Ks and the 10Qs, back in August, they filed their quarterly report, and here's what this looks like. Now, I'm not going to lie, these documents can be quite lengthy, and just, in that way, I think sometimes people can find them fairly overwhelming. But if you're investing in something, it's important to do this research, and I would go and look at the guides that the SEC website provides on how to do some research. Let's see if we can get to one other site that I'd like to show you quickly. We may or may not be able to get to it from here, but there is. See if we can find it. There is a fund analyzer on FINRA's website, and I will, here we go, right here, FINRA's fund analyzer. So if you're interested in investing in a fund, or maybe you've done some research and you've identified several different funds that you are interested in, put those fund names into this database tool, and it will do a side-by-side comparison of the funds, including the fees that the fund charges, which turns out to be actually a pretty important factor in the ultimate returns that people see. Even relatively small differences in fees can add up to pretty big differences in the returns that people see. And I will see if I can get back to, oops, that's just social. There is actually on the SEC website, if you put in, sorry, the website's showing up a little differently because I've got the screen maximized for presentation. If you put in the search bar on investor.gov fees, up will come a lot of really useful information, including a chart that shows how the difference between even fractions of a percentage point can cut into return. So again, I would do my research here before I invest in any particular fund. I do this side-by-side comparison, and I'd also pull up the information on investor.gov about fees. All right, back to the PowerPoint, and I will try to finish up pretty quickly so that I can ask and address any questions that you might have. Again, I walked you through edgar.gov, so you got to see this in person. Alternative investments, as I said at the beginning of the presentation, lots of times there are investments that people think are not securities that probably actually are, and are probably registered or regulated by the SEC and should be registered with us. So people frequently say to me that crypto investments are not securities. There are certain types of crypto products that are not securities, but a lot of crypto investments actually are securities. And for a long time, many, many years, the SEC has actually had a particular unit within its division of enforcement dedicated to investigating and prosecuting fraud in the crypto arena. So we're actually far more active in this space than we're sometimes given credit for in the press. And very often we will see schemes like Ponzi schemes that will involve investing in some sort of crypto investment where there's really no there behind the curtain. And people's money is being pooled together and they're being passive, expecting a return of profits, then it's probably a security and it's probably regulated by us. Sometimes people are attracted to the alternative investment world. Maybe they have skepticism about the general stock market. Maybe they're looking to balance out their portfolio. Just be aware that there is a lot of risk in this area. tends to be full of operators that provide a lot less disclosure, tends to be full of investments that are not as liquid, meaning much harder to sell. So once you get in, it's hard to get out. Lots of times they're pretty complex. They may be hard to understand. They may be hard to understand for a reason, because the fraudster has designed them to be hard to understand because there's no there. They might have very high fees. So just be very cautious investing in this space and do the same kind of research you would always do. Crypto assets, this is still an emerging market. So even if we're talking about legitimate players, we're not really sure how this market is going to play out yet. Think about the internet and search engines 20 years ago when they were first invented, and how many of those search engines really do not exist at all anymore. That's what the legitimate crypto market is like. It's still sorting itself out. So those investments are risky just by their nature. But then unfortunately, they do involve a lot of really bad players. And unfortunately, we do see a lot of money laundering, really flat out crimes happening in this space, such as human trafficking and moving of drug cartel proceeds. So this is a high risk area that you just want to be really careful if you're going to participate in it. Crypto assets are highly volatile. Volatility is a sign of speculation and a risky segment of the market. So again, proceed with caution, and understand if you are getting involved in this, there is a high risk of loss investing in crypto assets. As I've said, no matter what you invest in, any security, there is always the risk of loss. So consider that carefully, and particularly consider that if you choose to invest in more riskier spaces like alternative assets, including crypto investments. How much of your portfolio, if any, are you willing to devote to such high risk investments? Be cautious about engaging in trading based on social media posts. This is where everybody is now. And so this is where the fraudsters are too. And this is very often where they're spreading their message, whether it's on Facebook or TikTok or YouTube or what have you. Know what your long-term objectives are. Don't let your short-term emotions disrupt your financial goals, and be careful investing in what you see on social media. Do the research that we've talked about. Again, make sure if anybody claims to be from the government, you verify that before you deal with them. Don't pay for investments with credit cards. Don't wire money overseas. Don't pay upfront fees, and do your best not to speak to unknown salespeople. Make sure that you don't share personal information with them if you do. Everybody should know, I hope at this point, to secure their online accounts with passwords or whatever the strongest protection method is that you can use. And just to recap, now that you're aware of some of these common persuasion tactics and red flags, be alert to them when you're considering investments, and make sure you do your research and use the resources at investor.gov. That's the website. As I said, you can sign up to receive alerts and bulletins. And then finally, last page, here's some contact information. This is contact information for the SEC in general with the 800 number and the help@sec.gov website. There's our Facebook, there's our formerly Twitter handle. But if you want to reach the Los Angeles office in particular, you can email us at losangeles@sec.gov. And so now I'll try to get to the questions.
Yes, back. We have lots of questions. So Janice wanted to know, how well is the industry policed?
How well is the industry policed?
Investing.
Yeah, well, I think the SEC would argue quite well. We are just a mid-sized federal agency, not one of the super huge agencies, but not the tiniest federal agency either. But the size of the markets that we regulate is huge. These are the largest, most robust capital markets in the history of the world, the US securities markets. We're talking trillions of dollars. People who are registrants with us, so broker-dealers and investment advisors and investment companies, get examined periodically by our division of exams. They're not necessarily looking, they do cause examinations when they suspect that there might be issues, but they also do routine examinations just to make sure everybody's dotting their I's and crossing their T's and being compliant with the law. But when things look extremely problematic, like there might be serious violations or there might be fraud, that is when the Division of Enforcement gets involved. fairly active. We usually bring somewhere in the neighborhood of 700 investment enforcement actions a year. We recover billions of dollars. Um, well, millions at least. I think the most recent figure could be as high as a billion, but it is, quite a substantial amount of, don't quote me on that, quite a substantial amount of money that we recover and try to get back to harmed investors. But it doesn't matter what you're talking about, whether we're talking about securities or consumer fraud, there are always bad guys out there. And you do your best to keep up with them, but bad guys are pretty creative. And so that's why it's important to do your research. The way the securities markets are regulated in US law is it's buyer beware. So if people are providing you with fulsome, truthful information, then there's not much we can do. If that fulsome, truthful information is, hey, I'm not such a great guy, and this investment isn't really financially that such a good idea, and by the way, I might take a lot of your money and just use it to buy myself a big house, and people invest with that person anyway, it's caveat emptor, and then the SEC probably cannot bring an enforcement action in that area. So that's why it's really important to do your research and find out what they're really saying about what the investments should be.
Okay. Thank you. Marmar has a few questions. So, what age do you recommend to start investing? What kind of investing should someone start with if they've never done it before? First few things should a person do for putting money in there? She also has what are the safe investments?
Yeah.
Anything.
Yeah. All right. So let me see if I can address some of these questions. I cannot give investing advice. So I can't say that there is an age where you should start investing. Um, you can't legally buy stocks on your own until you're 18, I believe. But I will say, if you go on investor.gov and you do a little bit of research about starting to invest and do some research on compound interest, you'll really see that the sooner people get involved in planning for their financial future, the better. Because if you remember from school and learning about compound interest, that's interest on the interest. And you really have to use the tool of time to see the true benefits of that. And you can see it in the negative if you hold the balance on your credit card and then that charges interest and then they charge interest on the interest and pretty soon you have this huge balance. To make it work in the positive for you where you're making money, you have to have money invested and then the interest that you earn earns interest. And so the longer that you are invested wisely and consistently over time, the more you have the potential to get the benefit of compound interest. So I go on investor.gov and do a little research about compound interest. If you've never invested before, starting with that starting to invest section in investor.gov is where you should begin. And it has a lot of really helpful information. I can't give investing advice on what is a safe investment. Remember that I said all investments have risk. So if you're investing in securities, it involves the risk of loss, period, by definition, no matter what you're invested in. You may want to do some research on low fee index funds and that investing option for individuals. Again, I can't give advice. That may not be what's appropriate for you, but that is a place where a lot of people start at least their research.
Okay, we have like so many questions. Go ahead. Finish what you were saying. She wanted to know what the movie was and the movie.
So I mentioned two movies. I mentioned Wolf of Wall Street. If you haven't seen that, let me just say there are parts of it that are not child appropriate and maybe you might find offensive yourself. So if you're watching it, you might want to fast forward through those parts. But it does do a good job of portraying, I think, what a market manipulation pump and dump scheme is like. I also mentioned the movie that is out in theaters right now called Dumb Money. And that is also kind of an interesting portrayal of using investing apps to invest. I'm not endorsing necessarily the perspective of either of these movies, but they're sort of interesting. My personal favorite movie in this area is the movie that came out, and now I'm going to blank on the it was up for an Academy Award. Now I can't believe I'm blanking on the name of it. but was very good. It was about the housing crisis and had a lot of big name people in it. Uh,
Oh, the one with Steve Carell?
yes, Steve
Oh,
Carell is in it. Yeah.
yes, Ryan Gosling. Everyone was in
Yes,
that.
Steve Carell and Ryan Gosling. Just a really good movie, and also does, I think, a really good job of explaining some of the issues that arose in the housing crisis. Yeah, yeah.
Okay, Janice has just finishing up with a few more questions. What are your thoughts on treasury bills, bonds, and notes for investments?
Okay, again, since I can't really give investing advice, it's a little hard for me to answer, but I would go to investor.gov and I would search the term diversification. So I do give a different presentation that talks about investing wisely, and I'll probably give that one again at some point through the library, and that will get in more the idea of diversification. And so a lot of people would say one of the bedrock principles of investing is not to put your eggs all in one basket. So a diverse portfolio might hold some securities like stocks, but also bonds, and also maybe some cash investments and maybe some other kinds of investments, so that you're not only invested in stocks, and within stocks, you're not only invested in big companies or US companies. You're spreading your money across a lot of different asset classes and parts of those asset classes. So I would do a little research on diversification.
Okay.
The Big Short. Yes, that's the name of the movie. The Big Short. Thank you.
I know it is the big. I just looked it up too. Yeah. Thank you, Mondo. It is the Big Short.
It's a good. I like that movie a lot, and it's a good book.
Yeah. Just two more questions. Weather chart. He wants to know, or she wants to know, securities mortgage. Is a concern justified? It's so big.
Well, here we might get into policy commentary that I can't engage in. There is a saying, which I think is pretty borne out by statistics, that something like 10% of the people create 80 to 90% of the problems. I don't think the securities industry is any different than any other industry or part of society in that way. Like, they're just people who are just liars, and they're just always going to be liars and bad actors, and you do your best to weed those people out. Should the SEC be bigger and have more money? Well, if you feel that way, I guess you should maybe call your congressperson, especially as we might be going into another federal government shutdown. But there's where I probably really can't make any comments.
Thank you. Well, okay, last question. So if SEC protect an American investor who invests outside the U.S., like in the UK
Yes.
or Europe, is that possible?
Yeah, the answer is yes. It's a qualified yes. So we are not going to have jurisdiction, just by the nature of the way the law works, if all of the conduct took place outside the United States. So if you are living outside the United States and in France, let's say, and some French company persuades you to put money with a French person in a French investment, and your money just stays over there in France, then we probably can't do anything. But if you are an investor living overseas in France and you invest in something in the United States, or you are living in the United States and your money gets sent back and forth to a foreign country, then we may be able to get involved. And so we do, like, I had a Ponzi scheme where some of the funds got sent overseas to Mexico and to Costa Rica, and we got a repatriation order and got that money back from there. We have American companies who go overseas and sometimes violate what's called the Foreign Corrupt Practices Act by maybe paying bribes to foreign officials in foreign countries. We prosecute that conduct. If you were living in France or wherever and you invested in a Ponzi scheme that had connections to the United States, we might be able to exercise jurisdiction over that. So just because you are overseas doesn't mean that we might not be able to help you. That said, let me just say, there are some countries with which we don't have treaties that we can't get money back from. So a most obvious example would be China. The governments of China and the United States do not get along so well. So if money gets sent to a fraudulent scheme in China, there's probably not much we can do.
Okay.
You can probably think of some other governments that might fall under that same umbrella. Yeah.
Thank you so much.
The UK.
Yes, exactly. Thank you. Okay, we're out of time. Over. Thank you so much, Carol, for a great presentation.
Yeah.
I learned a lot. And I just want to remind everyone, if anyone missed any part of this presentation, it will be available for viewing again at LAPL's YouTube channel, youtube.com/Los Angeles Library. And also, for more information on all of our programs, please go to our online calendar. It's lapl.org/what's on calendar. So thank you again and have a great rest of your day, everyone.
Thank
Bye-bye.
you so much.